A lot of beginner traders open their chart and get confused where to buy and where to sell. So that is where AOI and POI comes in. So in this video, I'm going to explain what AOI means, what POI means, and the difference between AOI and POI, and also how you can use them to find high probability trade setup. So let's get started. So what is AOI? AOI simply means area of interest, and area of interest. So which means AOI is a zone that you expect price to react from on your chart. Is a zone. So it's not just a single level, it's an entire zone where you expect price to react from. So, and for example, we have different type of zone that you can consider as your AOI depending on what you are looking out for when you are trading. So we have supply and demand, we have support and resistance, we have premium and discount zone, we have order block, we have fair value gap. So it depends on what you are looking at for when you are trading. So some people that trade supply and demand, that is going to be, they will start looking for supply and demand as their area of interest. If you trade based of support and resistance, that is what you're going to be looking at for as area of interest. And premium and discounts, you can also look at premium and discount as your area of interest, and it can be an order block or fair value gap. So, but in this, we're going to be using supply and demand, for example. So now, let's say price is going to the upside like this. So in this case now, this particular level here, we have a rally, we have a base. So this entire base here is going to be, this is a demand level. So this entire zone now is going to be area of interest, your area of interest. And you are going to be expecting price to react at in this particular zone. So you are not just looking at a level, but this entire zone as your area of interest. So which means an area of interest is going to be is a big zone that you are looking at for that. Okay, anytime price goes to that particular region, you are looking at for price reaction. So you can also consider it as a neighborhood, not a house. So you know, in a neighborhood, you have many houses in a neighborhood. So, but you focus on that entire neighborhood, not just a house. So that is what area of interest means. So, and that's now take us to POI, which is point of interest. So POI means point of interest. So now in this particular area of interest that we have, you know, we say that this particular area of interest, we are focusing on this entire zone, which it can either be support and resistance, it can be supply and demand, it can be a premium and discounts. So for those of you that doesn't know premium and discounts, it's just from this swing points here to this swing high. And if you take your Fibonacci retracements, I'm going to be using another tool for that. So if you use the but if you use your Fibonacci retracement, anything below this 50, this is a 50%, which we know as equilibrium. So anything below here is a discount price, and anything above here is a premium price. So you can consider that, okay, anytime price come below that equilibrium, that is going to be your own area of interest. So you can also consider that as your area of interest. So that's about premium and discounts. Maybe I'm going to make another video to explain that much more better. So let's get back to point of interest. So now you know you now have your area of interest, but you don't want to just buy from this area of interest. You want to now look for a specific you want to look for a specific point or a specific zone where you level where you want to buy from. So that is where this point of interest comes in. So, and your point of interest can also be maybe order block, it can be a key level. So your point of interest can be an order block, it can be a breaker block, it can be a value gap or a key level. But it's going to be a level or it's going to be within this your area of interest. So it's going to be with, so let's say you are looking for maybe a breaker block from this particular zone now. So This can be your breaker block if you're looking for order block. You can mark your order block from here. And let's say you're looking for a key level. It can be from this key level here that we have here, or maybe key level that we have below here. But it's still within that's your area of interest. So now let's say price now come back to this point here. So you now focus on that's your point of interest that you have within your area of interest. Maybe it's your breaker block. When price tap into that breaker block within that your area of interest, then that is where you want to maybe take your entry from. So in that case, that will help you to minimize the stop loss size you are going to be using. So in this case, now let's say you want to buy, maybe you just buy straight from this point of interest there, and you put your stop loss below here. Maybe you are targeting this high. In this case, you see that the risk to reward here is very, very small, which is about 1:1.4. But let's say you now fine-tune, you refine your entry while you look for a point of interest within your area of interest zone. So in this case now, maybe you put your stop loss below this breaker block that you have. See that is about 1:5 risk to reward. So it's very happy to have more good entry and risk to reward. And let's say price come down to this zone here, and you take your entry from this particular order block that you have here. Maybe you still target this high as your target. You see, you have like 1:7 risk to reward in that case. So that is that about area of interest and point of interest, and how you can use it to find high probability setup. So instead of it to just buy straightforward, you now look for point of interest within your area of interest. So easy definition you can use is that you can say your area of interest is where you want to look at for. It's like a zone you want to look at for. While your point of interest is exactly where you are looking to buy or you are looking to sell. So now I think you should be able to understand what AOI means, what POI means, and the difference between them. And also how you can use both together. So when you have the better understanding about the AOI and POI, it's going to help you to stop chasing the market. We have a specific zone or a specific level that you are looking at for, and that will increase your decision making in the market. So let's quickly look for some example on the charts. Let's quickly look for some example on the charts. So in this case now, let's say you want to mark according to what I explained earlier. You know, we have a drop here. We have a drop. Then we have price rally back to the upside, which is the serve as the base, and price drop down again. So in this case, this entire zone here is going to be a supply zone. And if you mark it like this, you see that when price come back here, price sell. And if you take your trade straight from this particular zone here, let's say you take your trade from here and your stop loss is above that particular this zone. So but now let's consider that you want to refine your entry and look for your point of interest within this area of interest here. So, and the other block we can see from this time frame here is this. So this now is going to give you more accurate entry. And can you see what price did? Price come all the way back to this other block and it sell. So that here now you have more good risk to reward compared to when you take the trade straightforward from here. So just go on your charts and look for some example. I don't want this video to be too long. So if this video helped you, make sure you like, subscribe, and also join the Telegram community. You will see the link in the description below. And stay tuned for more educational videos like this. See you in the next video. Bye.